Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about another very interesting company which is into the retail business. And this stock has been a multi-bagger and given massive returns to its stakeholders. So from this stock, you will also learn how important is to have conviction on a company and hold that stock for a long period of time to enjoy the entire journey and get highest returns from that particular stock. So if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you are not a part of our Telegram channel, do join today by clicking the link in the description button so that you join the correct channel. Every day morning before the market opens, I share my analysis and views on the market, which will help you increase your portfolio returns to a larger extent. So now let's begin the analysis of Trent Limited. This will be the flow of our discussion. We'll start by understanding the business model of the company in brief. Then we'll look at the stock performance in the last 2-3 years. We'll look at the main financial parameters. We'll talk about the reasons which led to the rise in the stock price in the last few years. We'll look at the outlook of the company going forward. We'll talk about the valuations at present. We'll talk about the risks of investing in this company and then form an overall view on the stock at present. So Trent is a Tata Group company. It is into the retail business. They have different formats and different categories of stores. And right now they have more than 10 million square feet of area under their retail business, so which is a massive scale. They have opened more than 875 stores across different brands and formats. And out of this, around 811 are in the fashion category. And they are also into the food and grocery, which is in the name of their Star. And they have about 66 outlets in the food and grocery category. These are spread across 160 cities in India. So this was started in 1998, and gradually if you look at the journey, they have added different types of stores and different brands to their portfolio. They started with Westside in 1998, then added the grocery wing in the name of Star in 2014. And 2016 they added Zudio, which has been a massive success in all the categories which they operate. And recently they added Utsa, Misboo and Samo. So as far as I have noticed in our city, Westside and Zudio has been the greatest success for this company. And the growth rate at which Zudio is growing at present is phenomenal. Now within the stores itself, they have again sub-brands for different products which they sell. So these are some of the sub-brands in their stores like Westside, which we notice when you go to their showroom. So depending on the category of product, they have created sub-brands for different products. So in brief, it is a very simple model. They are into creating brands and retailing business across India in different formats of stores in different cities. When you look at the stock performance, it has given massive returns in the past. It was trading at below 500 levels during COVID, which increased to as high as more than 4,500. And if you look at the strength of the chart, technically also you will not see any weakness. Now when you talk about such good charts, one of the charts which I have seen which is similar to this is of Varun Beverages. So after that, I have seen only Trent as a second chart in our recently discussed videos, which has such strong technical indication. When you look at the revenue in the last 5 years, it has gone up from about 3,500 crores in FY20 to almost 12,375 crores. So it has almost become 4 times in the last 5 years. EBITDA has gone up from about 500 crores in FY20 to almost 1922 crores. So this again has gone 4 times in the last 5 years. EBITDA margin has more or less remained stable except for the COVID in the year and the year after that. So the EBITDA margin is stable at somewhere around 15% for this company. But when you look at the book value, it is just about 14 rupees compared to the stock price of 4,500. This is because this company doesn't require too many assets to be owned. So it is like an asset-light business model where most of the money gets into the store opening, inventory and creating of interiors for the stores, marketing, branding, etc. One big advantage in terms of working capital for this business is whenever they sell, they are selling in cash and they get immediate payment. And when they buy, they get some credit. So if they are able to maintain their inventory very well, then it is a very low working capital business. And that is one of the success reasons for this company, that they have maintained their inventory so low in spite of having more than 875 stores in the country. Please note that the jump in the FY24 PAT is because of one of the exceptional items amounting to roughly about 400 to 500 crores, which is included in the other income of 989 crores, included in the P&L statement. Now, what led to the substantial rise in the stock price in the last 2-3 years is the phenomenal growth shown by the company. They have grown by a CAGR of almost 70% in the last 3 years, which is very high compared to any other retail chain in India, where some of the retail chains are even struggling to be profitable. They have consistently increased their number of stores. They have created their brands which have become more popular and strong, which are adding to the credibility and value of this company. So all these things put together led to the growth in the price due to the increase in the sales and profitability, and also there was a massive re-rating in the multiples of the stock. Now, what is the growth strategy of the company going forward? Again, it is a very simple business model and a very simple growth strategy. They will continue to add more and more stores at the appropriate locations. They will try to enter new categories of products, like they have launched some recently new stores we have discussed in the earlier slides. So they will focus on the ethnic wear of women. Like this, they will keep entering the new categories and gradually create brand awareness in them. As the brand grows, the number of footfalls in their existing stores increase and the individual stores will become more profitable and the same store sales growth will also rise. Within India itself, it is a massive market and there are several under-penetrated areas which are ripe for these kind of stores to open, especially in the tier 2, tier 3 cities and villages also. Now, when we talk about the valuations, it is trading at a multiple of somewhere around 160 times, which is very expensive in terms of the earnings, and the price to book value is almost 40x. So what you notice from the valuation is that the re-rating of the stock has already happened, and from here the change in the multiples may not be possible. But whatever growth the company is able to get from here in terms of earnings will reflect in the stock price. Now, what are the risks of investing in this company? As an investor, your primary risk is the valuation part. But from the business point of view, the company should maintain their working capital very efficiently and should not borrow money too much. These are the primary risks in this business. And overall, there could be a demand slowdown if there is a slowdown in the economy. If there are similar format stores opened by other competitors, like the Reliance Group is also into the similar segment. And there are also new brands emerging like Style Union, etc., which will compete with stores like Westside and Zudio. So competition can hamper the growth of this company. And the new categories which the company is entering, if they are not successful in those kind of new brands and new categories, that can impact the overall financials. So that's about Trent. It's a crisp video highlighting only the important points of the company. So we have understood the business model of the company, the growth plans, the risk involved, the past performance. Now, what is your view on the stock? If you're a shareholder of this company already and have enjoyed this journey up till now, as the growth is still intact, you should continue to hold the stock. But you have to be very cautious if there is any weakness in the results going forward. But if you're somebody who is looking at a fresh entry at these levels, the risk reward is not in our favor at this moment. That's why you should wait for some correction in the stock and then accumulate gradually. But the most important thing to remember in this kind of companies is, as the valuations are very high, if there is any weakness going forward in the numbers, you should take an immediate exit because the derating also can be very painful. That's about Trent. I hope you like the crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention those names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.